I'd like to thank each one of you for joining us this afternoon for a technical session titled Lending to Women's Enterprises Balancing Social and Financial Returns. It is my pleasure to invite on stage the esteemed panel for the session. This session shall be moderated by Ms. Swati Chaudhary, Director, Network Development and Advocacy at Women's World Banking. And the panelists include Ms. Siddhika Agarwal, co-founder Mahila Money, Mr. Manish Bhatia, President Lending Cart, Mr. S.S. Bhatt, CEO FWWB, Ms. Roshan Zafar, MD Kash Foundation, Pakistan, Dr. Humaria Islam, founder and executive director, Shakti Foundation, Bangladesh. Ms. Zafar and Dr. Islam, they will join us online, but out of them, Ms. Zafar is not won't be able to join us because of some personal reasons. So we look forward to an insightful discussion with the panelists here. Now, I would like to hand over this session to Ms. Swati Chaudhary without doing any further delay. Thank you.
Welcome, everyone, and thank you for joining us today as we kick off the technical sessions. Here today, we have a fairly tall task to accomplish in our panel because the area that we are looking to explore is about how do you unlock lending to women enterprises, and does it lead to both societal as well as financial returns, or it's an either or. So I'd like to kick off this interesting exploration, and to do that, we're joined by four very esteemed panelists, and they've been doing exactly that about unlocking credit to women enterprises and balancing both societal as well as economic returns. And it's my endeavor that by the end of the session, they might give away some of their trade secrets to you. So before we start, just to give a little bit of a context, there are some things that we know, that, all of us are aware of the fact that MSMEs are a key driver of growth. We have a really growing. This segment is significantly growing, and you have the entrepreneurship rate, which is at 10%, growth rate at 10%. Women constitute around 34% of these enterprises in emerging economies, and that basically goes to show that they form like a very significant opportunity. This segment offers a significant opportunity. Also, women are the largest and fastest growing customer base, and if we and but at the same time they remain underserved by financial service providers, and therefore by in doing so we are leaving significant gains on the table, and it's time for that to change. And so therefore, for the panel, what we are seeking to do today are a couple of things. First, we're looking to see what is the value that gender intentionality can unlock. The second is how can we get FSPs to be more gender intentional? What does it take? Can we serve women enterprises at scale? And finally, what are the enablers that we're looking at? And for that, I'd like to invite my fellow panelists who've been doing this for a really long time. They've been able to really scale they're attempting to scale the lending to women enterprises. They've been doing that at optimal cost with the right delivery channel, and at the time when the women needs it. So with that, I'd like to kick it off. And first, I'd like to invite Mr. Bhatt. Mr. Bhatt, you represent community finance organizations around India, and they have very strong in-person uh, outreach and servicing model. Now, you've been working very closely with them and helping to and with women entrepreneurs to build their capacity. Now, given this background, what do you think is the economic opportunity of serving women entrepreneurs? Should we look at it only from a financial inclusion lens, or does it really lead to the economic gains that we speak about? Uh, so, is it an and, or is it an either or? And what should be the takeaway for financial service providers?
Good afternoon, everyone. Thank you, Swati. I think women enterprises getting the credit. In the morning session, I think a lot of emphasis has been laid on credit to women and enabling services for women. That is a great thing to happen. Otherwise, we find in many of the areas that whether gender intentional areas are discussed or it is highlighted, if in these conferences like this, and many of the even the inaugural speakers also have highlighted that the gender intentionality has been working and it has been there. With that, definitely there is a huge potential. All of us know that even the data what was given in the inaugural session or post that in the plenary session which one, we have seen that lot of potential exists and there is no dearth for that. And data is also available. Only further deepening and dividing those data into how it can be made useful for building some of the solutions for that. I think that is one thing. Second thing, if you see the opportunities, what are the opportunities? See, there is an estimate that about 158 billion USD is the credit requirement of the women enterprises. And this is not actually a small amount. It's a substantial amount which has to be catered. But what is the progress happening? We have seen that the progress in credit for women enterprises has been increasing over the period of time, and that definitely there has been growth. And if we see 2x, 3x growth has been there, that is a good development. But whether it is adequate to cover the entire mass, the number of women entrepreneurs what we have, no, that is not the thing. We need to have maybe 10x or 15x type of growth if we have to reach at least even the top segment of the women entrepreneurs. Because when we say the women enterprise loans which have been taken, when we see the Mudra category loans also, maximum about 79 or 80% of the loans have gone to the Shishu category, that is 50,000. That is home-based enterprises or those who are doing some small scale of activities. And on the universe, how much in the MSME universe, if you see, only the 20% of women enterprises have got. Out of that, again, 95% are the micro or the nano enterprises. I think that is the potential. Now, as Mr. Vaidyanathan was mentioning about the layers, yes, we have been able to touch the layers up to the middle level. How to touch the lower segment, the nano enterprises or the small micro enterprises, that too for women. The micro enterprises as a universe has got the challenge, but within that, gender has got further challenge. But definitely things are on the positive side. That is a positive development. Everybody agrees that yes, it is a segment which has to be. Even the investors also do agree that it is a segment which has to be supported, which has to be given. That is that. But only thing, we need to have patience. Everything does not happen overnight or the things like that, but we need to have patience. If we have patience, in the last week, I was on a field visit to some of the women groups who are, we have given them, say, some 25 to 30,000 loans, each of these women. We asked them, what is that you need further? Whether you need 50,000 rupees loan or 60,000 rupees loan. Surprisingly, these women told that no, whatever you are given is adequate. We will be working within that because we are doing it as a, after doing all our course, household course, we are undertaking this activity. Therefore, we will be comfortable with this amount. In that brings out lot as to how we have to show them the big picture. I think lot of education has to go to make these people self-confident to come out and develop their capacity to avail credit for their enterprises. I think this is a big area which we need to work, but potentiality, huge potential exists, and definitely there are products in the design. It is coming out. I think we need to tap that potential going forward.
Thank you so much, Mr. Bhatt. It's great how you're talking about the overall business opportunity which is there, and also speaking about capacity building. And we'll park this point because capacity building at scale is something that I also wanted to ask Siddhika about. But Manish, if I pose the same question to you, you represent a fast-growing fintech addressing the MSME segment. You've had the advantage of building smart systems from scratch. You have one of the largest databases in the country. Now, given the fact that women are mostly thin file, a large part of women are thin file customers, does the fact that they don't have traditional data set, is it a disadvantage to them? Would we be able to assess their credit worthiness? And what would you say to a lot of service providers who consider this as a limitation?
Well, good afternoon, everyone. So great question, right? So to give you a basic background of what we've done at Lending Card, right? We are a tech digital first company. We specialize in MSME loans. Overall, our ticket size is between 5 lakhs to 6 lakhs. We've up and down. Now, what we've been able to do is we have zero retail presence. So we have no retail branches. And we've been able to lend to more than 4,000 cities, 11,500 PIN codes, 11,500 crores, 1,000 crores of dispersal. So overall, we've been able to cover using technology from dispersals, which is distribution, to origination and underwriting, to collections, end-to-end pan-India. Now, one of the things that we've seen, and we've done a thorough analysis of our underwriting engine, that we've not let the biases of gender creep in. So we would, we would actually like to keep it that way, and we want to be gender agnostic when it comes to underwriting. Now, we actually did a very detailed research program with World Bank, Women's World Bank, and we found that while our overall algorithm, which is underwriting algorithm, is gender neutral, when we profiled women versus men, it turned out that overall the performance of women portfolio was about 200 basis point better, and the probability of women entrepreneurs to do a repeat was even higher. So the lifetime value actually increases significantly. So definitely there is business value and business potential. It's been extremely interesting. So from a data standpoint, right, obviously what we've been able to do is we expect our customers, women entrepreneurs, to be banked. And one of the topics of discussion in the morning conversation was about cash flow based underwriting is something that we've done for about 6 to 7 years now, and we are on version 9. So every year and a half, we sort of upgrade our version to figure out what's the best way to understand our ecosystem better. So there are different data points that we use. Cash flow based underwriting is one of them, the biggest one. Obviously, we use bureau data, but when it comes to thin file, we don't actually give it that much weightage. We also have social inputs, census-based inputs, business data inputs. All of that sort of churns into we actually being able to lend to even thin file customers when it comes to women.
Thank you. I think that's very interesting. If I just would like to stay with you a little while, that in terms of, do you think this opportunity that you speak about, is it something that it's obvious in the industry, or is it something that we really need to create an awareness of?
Yeah. No, I don't think so. It's very obvious, Swati. And I think it was an eye opener for us when we actually did this very detailed analysis of portfolio cuts to understand. First is our algorithm biased when it comes to underwriting? The second is, how does the portfolio actually perform? So, these inputs have given us, even a better, I would say, a better business case to say, okay, are there further discounting that we can do for women borrowers so that, overall our portfolio quality increases? So, I wouldn't say it's obvious. And it requires a lot of education and data analysis of each individual financial institution to understand where they stand and to sort of go in and double down on that opportunity.
Thank you for sharing that, because that's one thing that we've also had, we've struggled with as we speak to the financial service providers, because everybody starts with, but we don't discriminate. Men and women are exactly the same. But the fact that you need to design to be gender intentional, to design for their barriers, is very important. With that, Siddhika, I wanted to also ask you that you also have a lot of experience in looking at alternate data. You're a digital platform, and I think very unique, I must say, because it all started with to address a need that came from the women on the Shero's platform. So I wanted to ask you, what do you think about using alternate data? How do you go about it? And additionally, in terms of uh, sorry, I was saying that in terms of, one is in terms of alternate data. The second, we spoke about the gender digital divide was spoken about in the inaugural session. Considering that you're a digital platform, then how are you looking to scale it, and what's been your experience so far?
Thank you for that, Swati, and thank you for inviting us to this panel. Starting with alternate data and actually just taking a step back, Mahila Money is a fully digital platform. Like Lending Card, has no retail branches. Everything from origination of the loan to credit assessment and even collections, completely 100% digital. We're the youngest. I think we launched our app late in 2021 around December, and since then we've been very grateful and very lucky to be able to say, hey, there is enough and more opportunity. The opportunity, we're not even a drop in the ocean. We have more than 150,000 women who've downloaded the app, more than 2,600 women who we've disbursed loans to. And this is very tiny numbers when you hear Manish say we've done thousands of crores of disbursals, right? But the very important thing is threefold when you look at women as a segment, and this is everything that we've learned over the last 8-9 years of running women only platforms. One, women want a safe space. Women want to move forward, and it's not that they want to sit at home and only do their housework, but they do want to do other things as well. How do they find that safe space? So, to add to some of the research numbers, more than 70% women borrow informally, which means that they go to their family, they go to friends, they go to their jewelers or their society neighborhood money lender. They never ask for what is the interest rate. They say हमें 10,000 चाहिए, आप हमें उस पे 1,000 का interest बोल रहे हो, ये हमारे लिए सही है. But that level of trust, that level of not having to use jargons when I'm going for something that I'm already unsure, underconfident, almost fearful of, that first barrier is the most important to be able to crack. What we've done is created a community. So as soon as you enter the Mahila Money app, you don't see fixed deposit icon, recurring deposit. She doesn't know the meaning of all of this. It's as simple as, hey, this is as good as an Instagram page. Come and ask whatever you want. You'll have experts, you'll have us, you'll have people who are like yourselves talk in the same language to you. So that's the very first barrier any financial institution needs to be able to solve, which is how do you even get her to talk to you without her feeling like she's being judged, she's being looked down upon, or she's being talked to in a different way. That's rule number one. Two, like the way we said thin file, more than 60% of the users who come to Mahila Money are new to credit, which means they have no bureau footprint. They are not MSMEs. These women do not have registered businesses. They don't have Udyam certificates. They don't have MSME certificates. Till here, they may not even have FSSAI licenses if they're running, let's say food centers from home, which really rapidly grew during COVID. What do you do then? How do you establish that the fact that they are running a business, which is where alternative data becomes extremely crucial. Here, what we do is a bunch of things. Everything from, hey, do you have social media handles, if they're posting frequently, to if they have anything which is any digital proof, let's say their WhatsApp stories, profiles. This is the real world. This is where they're doing business, right? This is where they're finding their customers and selling to them. They should be given advantage or the benefit of the fact that this is their business. So also try building algorithm systems that can read through such alternative data. And then finally comes the third part, which is, again, like Manish said, the LTV of these users is very high. So we've seen NPAs below 2%. We've seen repeat customers more than 20% in a period of 1 year, which means that a woman who's taken a 10,000 rupee loan from us has gradually increased to a 2 lakh rupee loan. The woman who took a 1 lakh has gradually increased to a 5 lakh rupee loan. So that ambition and that zeal to want to do something exists. The only thing we had to do during this way was just hold her hand and support her to say, hey, you need any help, be it business mentorship, you want to run your business model past someone, you want market linkages, you need that. It takes a village to raise a child, the same way it takes a village to raise a company, right? It's no different. This woman does not have the same exposure we have living in metropolitans. How do you provide that to her is the third step that we've kind of incorporated, and that's how we're serving women across the country.
That's wonderful, and that's one thing that I mean, it's so good to hear from both Manish and you. We're talking about a higher customer lifetime value, because there is enough evidence, and a lot of our studies also show the fact that women are a good credit risk. They are very loyal and sticky customers. The fact that they use lesser providers, and within that they give testimonials, and women actually act on that. So all of that results in a greater customer lifetime value. Humaira Appa, if I can come to you now, you've been working with women enterprises for now many decades. And Shakti has always been very, very women centric in how you've designed products, how you've delivered them. Across this time, what is the change that you've seen, and what is the shift that is required today to serve women at scale?
Thank you, Swati. Thanks again for giving me this opportunity to discuss something which is very passionate to my heart. I would like to start by talking a bit about the evolution of modern entrepreneurs as we see today, and also the evolution of microfinance sector as an industry. So as I look back 30 years ago at women borrowers of microcredit programs, microcredit as it was called those days, and compare them with the entrepreneurs of microfinance institutions, I see multi-generation women of one number of generations. So it's like and each generation had built on the success of the previous generation, each generation of women. We need to talk about the needs to talk about solutions. So the need of the first generation of microcredit borrowers was very simple. It was one of survival. So the first generation of practitioners, I'm talking particularly about our country, but it resonates with the experience of other countries as well. And this was the year 1970s and 80s. The first generation of practitioners designed programs for poverty alleviation and women empowerment. So they focused on three approaches. The first one was they designed microcredit programs or small loans to generate employment and income for to feed hungry families, but particularly children. They also designed savings program to generate or for savings accumulation. But more importantly, they designed weekly meetings as a social network of peers. This brought women out, this concept brought women outside the threshold of their houses and gave them protection against gender discrimination in the family. So that was the first generation of credit borrowers. Very simple. All they needed was some kind of development programs to fight off poverty and get some sort of social empowerment. Then came the next generation of practitioners like me who dealt with the matured borrowers, with scaled up businesses or enterprises. Based on their needs, if you remember, SME loans products were designed. But unfortunately, what happened was these loans, because of their sizes, attracted, and because also of the market dynamics at that time, and taking into consideration the social and traditional culture of our people, these products attracted men and bypassed women. So, with this, what happened was there a shift in mission, a shift in the mission was starting to take place, or there was mission drift. This could happen because the products did not take into consideration the specific gender needs or needs of these, I'm emphasizing here the specific needs of the second generation women entrepreneurs or business women. But at the same time, what happened at that time was that the first generation NGOs, if you recall, were evolving into microfinance institutions with focus on revenue generation and institutional sustainability. So you see, what happened was women who were progressing pretty good with first generation practitioners, they were they started to earn money, they were generating employment for themselves and for other women in the community. There was peer group support system. So actually quite a lot of progress was made during that time. But things changed with the second generation practitioners because of, as I just mentioned, because of several factors, particularly as money became dominant, revenue earning became very important for the institutions, and women gradually got left out. With that, we come to the present generation, or which is a generation of technology, particularly digital financial services. this generation of practitioners are struggling with women who are reluctant to access uh, the DFS. And as a result, we see the low numbers, as we have been discussing, I'm sure in this seminar, but this is really a concern why women are not coming forward to take opportunity which the digital financial services are offering. The obstacle to my mind is that, again, the lack of understanding of the need of modern generation of women entrepreneurs. What I would like to say here is my way of thinking and my experience. I have worked extensively at the field level, plus my PhD thesis was in women empowerment and economic activities. So I would put the onus for the limited numbers, not on service providers, not on women, but on the service providers. As was just said, women are ready to take challenges, they are ready to go forward, and that is why we see, I must acknowledge that women have made considerable stride and progress from survivor stage of businesses to e-commerce platform. So there has been a transition, there has been a forward movement of women. Question is about the numbers. And the question is, what are the obstacles? I think, Swati, you asked me about the obstacles. I am convinced in my 30 years of experience working with women is that we need segmentation. We talked about data, we heard a lot about data, but we need specific data and on women, and we need to segment the population on generation, based on generation. As I said, over the last 30 years, there have been multiple generations. There are women of multiple generations. So we need to look at the solution, if we want some solution to bring women to our table, to the way we want them to respond to the services we are offering, then we really need to work at the generational level. So what really am I talking about? If we divide the entrepreneurs, modern of today, women who are into business, big or small, we'll find we can divide them into two categories, what I call the great divide. On the left, I would put women entrepreneurs of younger generation. They are the younger generation. Who are these? These are risk takers. What are their characteristics? They are active group, mentally, physically. They're quick learners. They are ready to try out new things. They can think out of the box. They can take challenges. And we do see that women are really doing pretty well. This generation of women are doing pretty well in businesses and as entrepreneurs. So that is one divide. On the other side, I would call them experienced generation. These are your SME borrowers who are really averse to risk taking. They go for areas where they're sure of the profit. They are reluctant to try out new things, particularly if we are talking about digital financial services. So I think we need to have data on these two generations, very broadly, and then do much more data analysis of segregate them. based on age, is for part of generation, market, then what are the other things that they do?
So basically, Apa, I mean, two very important things that I heard from you today. One is that the fact that you need to segment the women and then therefore understand them and address their needs. You can't look at them as one big mass. You need to really understand them better. And as you said, that different generations have different needs, and therefore you need to address their needs.
Yes, and this has to be done scientifically, and this has to be done in a way. So I'm saying it's just not you segment generations into two broad categories, and then you do further segregation or segmentation on other indicators as well. The market dynamics, what attracts women, the technology, how you have to design the technology, DFS, in such a way that women will accept it. To give an example, we have recently gone into partnership with Bikash, which is a
Wallet.
financial platform. And what we are doing is we are taking the Bikash services to the household. And we are looking now at the need of the family, in particularly women, and we are going to segregate the interests of the women and focus on women as such. So what I'm trying to say is that we need to look at women with a deeper lens, look at their problems, do some data analysis, and set women's needs into a framework which will help us design women-specific centric platform products. So I will stop here now, but I think it's very, but I'll add one more thing. It's just not the women, but it's also the service providers, which is making it's difficult for women of this generation women to accept the products that are being offered, because again we need to have gender segmentation of service providers, particularly people who are operating in the field. Now, if they belong to the young generation, they will, because of the characteristics, they will easily they'll be able to offer the products to their peers generation wise, and they will be accepted more than if the field staff belong to the previous generation. So there's going to be some kind of conflict of interest, conflict of understanding. So I think we need to do more research and in-depth data analysis, and then and on a much bigger scale, and then design products. Then there is a possibility that numbers will grow. Thank you.
Thank you so much, Apa. I mean, the fact that, and it's very interesting that you brought this up in terms of really trying to understand women and putting the onus squarely on service providers, saying that, and that's the second time we've heard on the panel. We've heard Sitika say that you have to make the digital work for them and not expect them to build the capacity and come forward. So. Now, one other thing that keeps coming up, and that's something that I'd like to, but then Mr. Bhatt, if you could take this one, is with regards to we have these fabulous numbers of untapped women who are out there, and on the other hand, you have financial service providers who say that they are willing to lend to them. But are there women there? So are we being able to reach them, or what? Or is there something that we have to do drastically differently?
Yeah, if you see the total space of this lending, no? No, the larger lending for women has gone from the SIG groups. That is about 11.9 million SIG groups. Then another 7.3 million. Maybe there will be overlaps. About 2 lakh crores has gone to these women. That's one space where we are looking at. Second one is the microfinance industry, which we say that about 6 million or 60 million unique households are there, and they are available and they are taking the credit from the segment. They are taking. But the microfinance movement has taken over 30 years to develop from that space of, say, starting giving the informal credit, then now into a formal segment of credit. If you see the NRLM and the SHG lending space, it's the more of government support. The other support from the government in terms of incentives and the technical advisory services for these people, which has made them to come to the mainstream and try to do that. I think this is the space if we are targeting, no? Because now we see in the microfinance industry after the Reserve Bank of India changed the guidelines on microfinance, many of the MFIs going for individual lending and enterprise space. I think Annapurna Finance, based out of Odisha, then even Satin Credit, they have exclusively developed products for these MSME lenders. I think that sort of very segmented approach to address the willing middle, what we call as, because these are all the people, as I was mentioning earlier, no, that there may be certain mental blocks among certain women, maybe at the lower segment of the economic strata. But there are women who are aspirational, who want to grow, but to their aspirations, there is no solution for that. I think that the willing middle needs to be addressed with different type of products. Maybe there is facility for even from banks or other spaces up to 50,000 rupees per. But if you woman entrepreneur asks for 1 lakh or 5 lakhs or 10 lakhs, beyond 10 lakhs, maybe they are providing collateral security, that facility is available. But between 75,000 to 10 lakhs, that is the segment which, in order to have a catapult growth in the women entrepreneurs piece, no, that segment has to be addressed in terms of products. Then gender intentionality. Definitely, I think even lending card or FWWB as we are lending, no, I think we need to see that when women have proved that they are good borrowers, their NPA percentage there, their loyalty is good, and they have got good behavior, and if you are with that, your profitability also goes up. I think that gender intentional. Suppose if I am doing, say, 10,000 loans during this year, I should target myself that, okay, more than 5,000 loans should go to women. That should be the intentionality to see that this segment is addressed. That is one thing. Second thing is the credit guarantee structure, which has been working in the banking space and the things, no? Yes, there are even the morning CDB chairman was also mentioning about the CGTMSE, then the Pradhan Mantri Swadhan Yojana guarantee scheme, then the Mudra guarantee scheme and all those things. But these guarantee schemes are, by the way, are little complicated for the even the banks also, because there are so many conditionalities attached to it that having understood that space, no, they would not like to go forward. Only what they will see is if they are otherwise eligible as per our normal system, then I will cover under the guarantee system. If they are having some deviation, 1 or 2 deviations, no, they would not like to cover under the guarantee scheme also. I think that sort of support, even in the guarantee structure, also should come that, okay, when you submit a claim, that, okay, 1 or 2 deviations are there, but there are genuine deviations to support that women entrepreneur. I think if that support is coming from the guarantee, no, definitely there would be a long space for growth. That is the thing which has to happen.
That is indeed would be a really great enabler. I think we have to dig deeper on the idea. Manish, what we again, I think the same question, but like a slightly different flavor about reaching more women. I mean, as you said, you have no branches. The if what if in today's scenario, the number of women who apply for these loans would be a smaller proportion than that of men. In that scenario, how would we reach more women?
So,
Prashant.
I think overall, in order to extend reach, there are multiple ways to do it. One is, organize various different organizations, educating them on what's out there and your ability to sort of, reach out to women, educate them on what's out there, how to take loans, what does financial general knowledge really mean? What is IRR? What are the rates you should look at? I think some ways to sort of educate them. I think the other piece is also true is that over 700 million uh, Indian citizens actually have access to internet. So, while there are various different good organizations that are trying to create a mark, I think, if there is a way to sort of directly make sure that uh, technology has created a level playing field, and anybody has access to the same information that a male counterpart might have. So women entrepreneurs also have it. So some way to sort of make them comfortable, to really understand what's out there, how do they get access to credit, how do they improve their credit rating, um, and it has to be both ways. One is organizations should be able to sort of reach out to the last mile. Second is women entrepreneurs should somehow get the confidence that what they're reading on the internet, their ability to sort of reach out, improves. But to sort of generally say, right, there are about, I was reading the World Bank report. About 19% of women actually get rejected versus 8% of men, which is up 2x the number. And India really wants to take a big stride, right? So we recently surpassed UK when it comes to GDP, which is 3.3 trillion. But if you look at the per capita income, per capita income of UK is about $45,000. Per capita income for India is about $2,000. So obviously our strength is in the number of population. But imagine if the per capita income of each, and mainly the women entrepreneurs as well as women workforce is about 30 to 33% in India. I'm sure the entrepreneurship is even lesser. Some way to help them get into the workflows, obviously contribute to their family and contribute to India would be an awesome undertaking.
Thank you. So, you brought up a very important point about capacity building, and that's something that I've heard from all three of you and from Humaira Appa. So, the uh, do you think, Sadhika, we'll be able to offer business development services at scale? We know that we've heard that they've been limited research on this, but there's a World Bank study which basically says that the payback is within a year or two, but it is a significant amount of investment to make to get more women in.
I think capacity building is at multiple levels, and we also do need to take a tiny walk in the history to be able to develop for the future. We're talking about business loans to women. I wonder how many of us really know what are the top businesses women are involved in today. And I'm talking about micro solo entrepreneurs who are, running very small businesses where their revenues range from about 10,000 rupees to 2 lakh rupees a month and doesn't really go beyond that. Systemically, what has happened is because of the government, the NGO, and the public institutions pushing or providing business capacity building training programs in certain sectors, large population of women in the country have therefore adopted those as their businesses. To name a few, parlor services or beauty services is the top industry. So you will have door to door, women who are parlor owners. These aren't registered businesses, but they're working, they're earning money, right? There are resellers or stitching or, related to the garment industry. This is a huge sector again. Every nook and corner when women come and apply to us, we serve more than 7,000 pin codes. Every time a woman applies to us, मैम हम स्टिचिंग करते हैं, स्टिचिंग के साथ साथ हमने सोचा ब्यूटी सर्विसेज भी कर लेंगे. You know, but you're like, but you're already doing stitching. Why do you want to do beauty? मैम वो 10 रुपए और कमा लेंगे, right? These two are the largest professions in the country for women, because these are the largest skilling programs that the government runs in India. When we're now talking about the future, we're talking about the same woman who has, and we're talking about middle income India. We're not going to rural agricultural land yet. We're talking about women sitting in Agra, Tanjore, Trichy, your tier 2, tier 3 cities of India. These are women like us who are sitting in their home, have to manage their households, have bunch of other household chores to perform, but over and above that, want this business building activity. I don't think it's an investment which is a large sum. It's respecting that woman's time, because time is the only currency that she has that she can afford, right? How do you therefore develop training programs around that? Google did something very brilliant recently in collaboration with Shiro's, where they've been able to train women across India digitally through bite-sized videos. And these women not only learn how to apply for a PAN card, link their new number to their Aadhaar card, do digital marketing, create their Google My Business page. These are the skill sets that are needed today. And therefore, why are we thinking of, massive business building investments or very long time courses? No, that's of a bygone era. That's not what's needed today. These women are like, hey, we want to earn money now. You tell me what I can do now, right? So we need to develop capacity building programs, keeping that in mind, and not stereotyping the professions women can get into, but opening the world of professions that they can get into. And I think that's the challenge at hand that every service provider in the financial space really has today if they wanted to crack this market.
That's great. And now, as we are coming to the close of the session, I wanted to just ask all our panelists. So, if we can, start with you, Mr. Bhatt, that if you had, in 30 seconds to say what would it require to take the to, for for lending to women to take a big leap. I mean, what do you think we should be talking about in next year's conference?
Yeah, instead of going for a structured credit scoring system, no, like she was telling, you need to have the alternate data. What is that? Her strength. I think we need to measure that and incorporate in your credit score, so that we need the real credit score which is happening with her. With that, definitely most of the women we can bring onto the lending line. And second thing is the already assisted women entrepreneurs. If they are able to give more education for the employed ones or even the other class of women, no, definitely it would make a lot of change.
Thank you, Manish.
I would just say, educating women entrepreneurs is number one. I think, like she was saying, starting with just the basics of what it really means. Because after that initial handholding, I think, I've seen them sort of take off. So just education, basic education. What does basic financial accounting mean? How do you sort of run your business? Some very, very basic accounting needs, and what is actually running a profitable business. They actually know it. But there are so many jargons. If a women entrepreneur actually goes to a bank, sits in front of an officer, it is an extremely daunting task, right? So I think access to information is there. Ability to sort of help them with that is my one pet peeve.
Thank you.
I think for all of us, it's just creating that safe space for the woman to be able to come and talk to you. And like Mr. Bhatt and Manish said, just giving her that opportunity to come to your doorstep. This is a country, we're a credit hungry country. Everyone needs the money. There is no one who will say we don't want money. You need to create that space where she can just come to you and say, hey, this is all I have. Now tell me where to from here. That's what we need to do.
Thank you. And that brings us at the close of the panel. A big thank you to all our panelists. I think these are very important conversations, and I think it kind of also tells us that how we are connected, because we are all trying to solve collectively solve these common problems that we have. So, thank you today for underscoring the economic opportunity, the fact that, we need to be gender intentional. How do we need to be gender intentional and build the capacity? So thank you very much.